Good afternoon and welcome to Business News from Mumbai. This is Shailesh Pethe joining you with the latest from the financial markets and the last week. When the times are bad, investors prefer safer to high-flying returns, and insurance companies are obliging once bitten twice shy customers by offering a slew of products that protect the initial capital. To discuss more about this and overall stock market situations, we are now joined by Aneesh Srivastava, CIO, IDBI Fortis Life Insurance in our studio. Anish, welcome to Business News. It's a global, everyone knows about the global financial turmoil and its impact.
Right.
What are the reasons for the corrections, the major corrections we have observed in the Indian stock markets?
Well, one of the biggest reason is that the global macroeconomic environment is deteriorating very rapidly. In last 6 months, we have seen sharp corrections in GDP growth rates, and then liquidity situation also was very poor. It all started with the housing sector correction in the US. When housing prices started correcting, then the people who had borrowed loans from banks and institutions, they started defaulting. And because of that, many institutions and as well as the banks were in trouble. So it started with that, and because of that, capital requirement for many of these banks went up. So because of that, this whole credit crisis evolved. And unfortunately, this has happened in an environment when crude and commodity prices were going up. Most of the central bankers were fighting with rising inflation, and hence they were increasing the interest rates. Since interest rates were also very high, this all precipitated the whole situation, and hence there was a sharp correction in the markets. In any case, last 4 years we have seen the sharp run up in the stock markets. So that has also led to some kind of a sell-off in the global markets, and the same impact was seen in India also.
Of course, it was subprime crisis in US, and the bankers, everyone says the crisis of confidence.
Right.
But how it has impacted India, because there was an economic summit. Most of the industrialists, they say, when we are not a part of the global problem, but the solution, everyone is demanding solution from us. So how India is impacted?
What you're saying is correct, that export is approximately 18% of India's GDP. If you compare it with say countries like China, wherein export is more than 40% of GDP. So in that kind of a scenario, ideally India should have remained immune. But if you see India growth story, as I perceive, it is dependent upon 3 legs. One was outsourcing, second was investment, and third was consumption. Now as far as outsourcing is concerned, it got impacted because global demand is dying down. There is a degrowth happening globally. When it comes to investments, see, investment accounts for around 30% of what of India's GDP. Whereas in last 5 years, when GDP has grown, investment has contributed 50% of the GDP growth. So investment was one of the prime drivers for India's GDP growth. Now, in current environment, when liquidity is not available, when interest rates have gone up. So in this kind of environment, it is very difficult to go ahead and make aggressive investments. So now investments can come either from government or from the private sector. As far as private sector is concerned, because of high cost of credit, as well as because of uncertainty of the demand, they are finding it difficult to go ahead and put the investment in place. As far as government is concerned, because of high crude and commodity prices, what we have seen is that that fiscal deficit has showed up. So government is also finding it very difficult to put forward a lot of money and kickstart the economy. So recently we have seen an example of China, where they have decided to invest $150 billion for infrastructure investments. See, they have a current account surplus. They have a huge forex reserves, so they can afford it. But unfortunately for India, we have to find out alternate sources of doing this. So we are still trying. But because of all 3 legs, that is outsourcing, investment and consumption, why consumption got impacted is because if companies, some of the companies like which are in IT sector, if they are laying off employees, then obviously those employees would not be in position to get the salaries, or for that matter would be in position to consume. Similarly, we have seen layoffs in say construction sector, we have seen layoffs in the banking sector. So that is also impacting to some extent the consumption led boom also. But my sense is that perhaps for India this is a temporary phase.
Of course, there is a basic difference between India and China. The China's, they are basically depending on their exports, and India is more the consumption based economy. Of course, everyone is waiting when this global and domestic environment will stabilize. What is your view on that?
Well, I think we have recently seen that in Asia, countries like Japan, countries like Hong Kong, and now Singapore has announced officially that they are into recession. When we go back to Europe, we see that countries like Germany as well as Italy have announced recession. Officially, US as well as UK have not announced. I think still a lot of bad news has to flow in. So it would take at least 6 to 8 months time for economic environment to stabilize. So once economic environment would stabilize, then we would see over a phase period some stability coming in. Most of the governments have taken fiscal as well as monetary steps to stabilize the economies. We must have seen that, you must be aware that they have cut down the interest rates. At the same time, various bailout packages are announced by the governments. So I think these are the positive steps which are taken, but I think 6 to 8 months time still would be required for economies to stabilize. When we compare this with India, I think India's situation, I feel, is much better. As we said that we are into investment-led growth. If interest rates are cut down to zero, say in US or Japan, this is very positive for India. Now crude prices and commodity prices have corrected. India is a net importer of crude and commodities. So India's balance of payment position would improve. And hence, I feel that even currency would strengthen over a period of time. So this was that's the reason why I feel that this is a temporary phase for India, and despite many countries going into recession, I strongly believe that there is no reason to say that why India would go into recession. I think in the worst case scenario, 6.5 to 7% kind of a GDP growth that we would be maintaining.
Of course, there are enough initiatives from RBI also to influence liquidity in the system. Repeatedly statement from the finance minister also, the robust economic growth is still there. But the stock markets are impacted very badly, because if you see from January 2008 to November 2008, a huge difference on the Sensex. So what is your take on this perspective of stock markets now?
See, there are two things which have happened. One is that there has been a deterioration in the earnings. So earnings growth, which was 24% to 17%, has come down substantially. In first 2 quarters, we have seen around 18% kind of earnings growth. We have seen around 8.5 to 10% kind of earnings growth. For full year, our expectation is that it would be around 5 to 5.5% to 8% kind of earnings growth for financial year FY09. So one is that earnings growth have slowed down, and second is there has been a contraction in multiple because of the credit crisis which has happened. So these two things have led to a substantial correction in the stock markets. And if you see today's scenario, I mean, you pick up the history of Sensex or Nifty, you would find that we are trading at one of the lowest multiples of the in the stock markets. So I would say that that these are some of the good times to invest, but invest for long-term perspective.
Of course, it should be for a long-term perspective. What are the sectors and stocks looking good? And of course, it's very difficult to give the next level. But what is the journey for the Sensex for the next year is expected?
See, I think 2 important questions are there. One is that where should be the bottom? At least fundamentally, where should be the bottom? And second is that in 1 year's time, where we can see the markets. As far as our perception is concerned, that in a worst case scenario, Sensex did a last year's earning of 840 rupees, and going forward in 1 year's time, even if we assume that there would be 5% kind of a growth, first 2 quarters in any case we have seen, so we can assume safely that there would be 5% kind of a growth. And if we multiply this by the lowest valuations of the market for last 20 years, which is around 10 times, so I think 8,500, 8,900,
that is the level one should
be the level, should be the bottom valuation level. But normally what happens is that market has a tendency to overshoot and may go down. But you would find that because valuations are attractive, there would be sharp bounce backs also at these levels. It may take some time for markets to stabilize.
The last month has seen like various announcements from the funds like Bajaj Allianz or Reliance also, or ICICI also. What are the funds like you are offering, like IDBI, Fortis, and is it relevant to the current very volatile scenario?
Well, we have a very interesting bouquet of products. I would classify my products into 2 parts. One is the traditional normal products, like we have equity fund, we have liquid fund and income fund. Second kind of funds are funds which are risk-free funds. Because of this kind of an environment, we wanted to launch some funds which are absolutely risk-free and investors can comfortably get into those funds. So we have launched funds like Capital Guarantee Fund, wherein investors can participate into the upside of equities as well as their capital is protected by the company. Similarly, we have offered a guaranteed return product, wherein we are offering 8.5% kind of guaranteed return to investors who are not interested in equity market but are interested in earning a fixed return. Similarly, we have monthly interest account, wherein every month we announce our interest rate, and that interest rate gets accrued on a daily basis on that. So these are very interesting products which are risk-free products, and
of course now the investors are looking for the capital protection more than anything premium return or anything return. Anish, thanks a lot for joining us on Business News.
Thank you very much.
Well, that's it from Mumbai at this lunchtime. Thanks for watching. For more news, you can log on to our website ddinews.gov.in, and for suggestions, do write to us at dd.biznews@gmail.com. From Mumbai News team is goodbye, but stay tuned for Samachar in Hindi from our Delhi studio. Namaskar.